To say the stock market has been volatile over the past 2 weeks would be a real understatement. But what does that mean for your investments and your retirement? Let's go beyond the headline this morning and take a closer look. With the coronavirus disrupting global markets, I'm sure you've heard the term bear market at least once over the last few days. But what does it mean? Well, basically, a bear market is a 20% drop from a recent high. And after Wednesday, the Dow is now officially in its first bear market since 2008. They call it bear to symbolize a bear swiping down with its paw. And a bull market is the exact opposite, when a bull thrusts its horns up into the air. And the roller coaster ride that we've been on over the last 2 weeks on the Dow Jones Industrial Average has never happened before in its 135-year history. Take a look at these numbers. Up and down, 1,000-point gain followed by a 1,000-point drop. It's volatility like we've never seen before. So what does this mean for you at home? It's still too soon to say. And it's worth noting that most bear markets are temporary and don't lead to an all-out recession like we saw in 2008. But when markets are down like they are right now, it might mean that money in your 401k, the cash that's taken out of your paycheck every other week and deposited for retirement, it could mean that number is a little bit lower than it was a couple weeks ago, back on February 12th, when the Dow was at an all-time high. And for a lot of people, today is payday. So the coronavirus outbreak is without question having an impact on Wall Street right now, basically because no one knows what's going to happen with this thing just yet. The Dow had its worst day in history on Thursday, really since Black Monday back in 1987. Dow futures are trading up right now, which could be a good sign, but we have seen massive swings overnight. We'll all be watching Wall Street when the opening bell rings at 9:30 this morning.